This company is riding a very powerful trend. First off, read this disclaimer carefully. This company is in the stationary robotics theme. If we go here, these are robots that are fixed. I make the distinction between stationary robots and mobile robots, because I think that's the two primary categories in robotics. The company in question in this video is Accuray. They are in the medical robotics business. Here you see the distance from the 52-week lows, 52-week highs. The reason why medical robotics is so interesting is because of this situation. This has definitively increased the interest in medical treatments where there is less contact between the patient and the doctor. Beyond that factor, of course, robotics have, it has huge advantages. When a human does any kind of operation, there are these micro movements in the muscles, and that is the reason why there are these, mistakes every now and then. In other words, robotic surgeons are superior to humans, simply are. This is still in its very early phases. Accuray is a company that's pioneering the transition to medical robotics. Here is one of the most interesting products they have, and that is CyberKnife. Precise robotic treatment as individual as every patient. Stereotactic radiosurgery and stereotactic body radiation therapy using 6D dynamic motion compensation, the only system to track, detect, and correct for motion in real time. They are treating cancer patients. Here are some other, images. The CyberKnife system empowers clinicians to make the most of their skills in treating cancer. It's the only robotic radiosurgery system that offers highly precise, non-surgical treatment for tumors and lesions anywhere in the body, including the prostate, lung, brain, spine, liver, pancreas, and kidney, with the added accuracy of automatic real-time tumor tracking and motion synchronization. This is definitively this is the future. This is really the future. Of course, when it comes to these highly disruptive businesses, there are tremendous uncertainties. Here you can see some video in the background. But let's be perfectly clear. There's no doubt about it. Robotics is the future. This is a very powerful trend, but there is a major but. Because this is very disruptive, huge R&D costs, there can be difficulties for the market to price these companies. If you look at Accuray's share price, you see that it is quite clearly in a bear market. Meaning, from a technical standpoint, this is certainly not a screaming buy at this point, but this is one of the stocks to certainly have on your radar, because the underlying trend is really powerful. Let's do some other kinds of analysis. Let's look at some trend analysis here. Get the moving averages, daily data points. You can see that we are below many of the key moving averages here. The bears are certainly in control at this point. If we zoom out, going here to weekly data points, you can see that we have recently made the new all-time lows, but that has had some interesting effect on the fundamentals, which we will get into soon. But sure, from a trend perspective, the bears are in control. Let's do some momentum analysis to look at the momentum of the bear trend. Here are daily data points. You see here that we are approaching the lower Bollinger Bands. Technically speaking, the price stays within the Bollinger Bands 95% of the time, hence there is certainly a possibility of some bouncing at that level. And if you look very long term and you want to build a position in medical robotics, then this literally is one of the best times to do it if you want, a lower price. So you need to also take a bit of a contrarian standpoint. A sell signal is sent here on the PPO. There is certainly the bears are in control. Hence, this is more of a case of a stock to have on your radar for any potential improvement. Looking at money flow here, the bears are in control. Of course, given that the bears are in control, this could also be a shorting opportunity. The reason why I would not be that comfortable shorting Accuray is because we have already had some quite significant fall. Here you can see here share price is around $11. Now we are around $2. There's been a huge pullback, meaning I would feel much more comfortable having a speculative long position here than a short position, because it can really move against you. Looking here at this is quite interesting. Okay, this gives us the picture all the way from the financial crisis, and here is the accumulation distribution line. It shows us that during this phase there was a significant rise here in buyers, and the number of buyers, the accumulation has been relatively stable, which could be an indication that some of the smart money, some of the big players are building, even though the price has gone down, they are building a position here in Accuray. Let's finally do some long-term analysis. I'm using, stockcharts.com here, a very interesting website. Let's go to the dailies. Well, let's go to the weeklies actually. Looking at the RSI here, you can see that we usually bounce here from the lower part of the RSI band. The only time we slipped below 30 is way back here in 2011. We recently had a bit of a bounce. Could be interesting. If we look at the seasonality of Accuray, it becomes interesting, because this shows us the percentage of months in which Accuray closed higher than it opened. This is from 2016 to 2020, and you can see here that May is usually not a good month for Accuray, but we are entering June and July, which you can see here 50% of the time the stock has closed higher. It's one of the better months. The best months for Accuray seems to certainly be January, September and November, but you could make a case now for a speculative, at least have Accuray on your radar. Let's now look at some of the fundamentals. One of the unintended benefits of a share price going down is that the stock price relative to the fundamentals can become more constructive. In this instance, Saks.com, they have upgraded their rating of Accuray to number 2 buy. They have a C value score, which is pretty darn good, given that this is medical robotics. Yeah, so a C value score is pretty decent. D growth, a bit mediocre. F momentum, quite clearly the bulls, they do not have the momentum on their side, but the bears, they have. It would be an A momentum for the bears. The company is rather small. The market cap is $173 million US. When we do a deeper dive here on the fundamentals here, you can see that here you can see the institutional ownership, pretty huge here at 76%. There's the short float, which could also create a condition for some short squeeze. But one of the indicators that are quite valuable, that's the price to sales ratio. A price to sales ratio of less than 2 is considered good. A price to sales less than 1 is considered to be excellent, okay? This is 0.43, so the price to sales here is really good. Hence you could make a case for this, for the bears just having gone a bit too far in this instance. Here you can see the year-to-date performance. Over the last month there's been a promising rise, 12%. Here you can see some upgrades and downgrades. Given that the share price is currently around $2, these are some of the price targets, okay? $9, $10, $8. The lowest price target here is $6.50, which is, many 100% above the current level, which also is a case for Accuray. Okay, so to sum up my take on Accuray. From a fundamental perspective, this is an interesting candidate. It just is. Especially the price to sales ratio was really good. From a technical standpoint, across multiple different indicators, it's quite obvious that the bears are in charge. However, given that the pullback has been so significant, I would definitively not be able to sleep being short Accuray. It simply has gone down too much. You saw that the analyst price targets were hundreds of percent above the current level, and that was like the lowest price targets. And this is an extremely dangerous short. When it is a very dangerous short, the selling pressure is very likely to start to subside. When it's going to happen, hard to tell, but this is a very powerful trend on top of it all, and this is it. It makes a lot more sense to look for bullish opportunities for Accuray than bearish opportunities. So let's do some bear market investing 101, okay? So this is just very general. During like a global bear market, it makes sense to seek low beta. Beta is the measure of relative volatility, and usually relative to the S&P 500. A beta of 1 means it's just as volatile, while 0.5 means, as an example, that it is 50% less volatile. Another important thing, that's to seek high alpha, which is also called outperformance. That's the excess return on an investment relative to the return on a benchmark index during previous bear markets. Adding the previous bear markets is something I have done here. Another thing that's classic to do during a bear market is to seek dividends. Defensive stocks, they tend to perform better. That is, companies with strong balance sheets and history of relative strength in previous bear markets. A defensive stock is any company that offers products and services people cannot do without. You can't do without a cruise, you can certainly do without that holiday, you can't do without that expensive watch, but you need your utilities, you need basic healthcare, discount retail. Another key thing, and this is where Accuray steps in, because Accuray is not really a defensive stock, but it is a stock that is riding very strong long-term trend. The trend is definitively in favor of robotics. Most would agree with that idea. Especially now with the contagion situation we've had, that will increase the demand for medical robotics. The reason why companies like Accuray and similar companies in very disruptive businesses have seen big pullbacks, that is because it is very difficult to price a company that is in a very disruptive space. One of the issues is that there are very substantial R&D costs. The price for the machines are also, they are expensive, which makes a lot of sense because there's tons of research going into these products. However, what we have seen long term, looking across many industrial and technological revolutions, is that the price is very high initially, but there is this breaking point where the ideal price is met, and that's when you see these stratospheric rises. Just look at, computers. It was extremely esoteric, no one believed in it, the companies in the space were extremely underpriced compared to where they should be, but when people fully appreciated how disruptive computers were, I mean, the companies in that space, they saw like thousands of % increase and more. Stock bull markets in other countries, that's another thing to hunt for. We have looked at that in some of the weekly videos. Precious metals like gold and silver, they also tend to perform well during bear markets, especially gold. People tend to flock to gold, and we have recently, along with the big rally in the stock market, we have seen a strong rise in gold. Okay, let's quickly go through the rest. Bond market, government bonds, and better than corporate bonds. No, B-rated corporate bonds. The forex market, many opportunities, commodities, volatility products, bearish bias ETFs, market neutral ETFs, inverse stock market ETFs, short selling, option contracts. That was a bit of a look at Accuray. You do, of course, you want to let the trend be your friend.